You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the old network. Lots of programs kicking about on the old network, working on some new ones, hoping to get those out to you one of these days too, on some interesting products you guys are probably pretty excited about these days. So if you guys are into it, we try to find a way to include it here on the old network. You guys know the drill by now. Good place to go for the deep dive into the archives, the website, or indeed our app. Our app has everything. We've had to limit even on our website recently just because it's so much. The archives would break what we have up there. So maybe in the new iteration of the site, we'll get it all up there. But it's about at least 100 episodes deep on each of those shows. So you should be good there for a lot of them. The app has everything, of course, if you want to just subscribe, set it and forget it. Your iTunes, your Pocket Cast, your TuneIns, all that fun stuff. They'll do it for you. Then you're good to go, and a lot of you like to go that route. Make sure you get the network if you go on that route, because then you get everything delivered on your own schedule. And, of course, if you want to join us live every Friday, noon Central, 1 p.m. Eastern, that's the time for Vol Views. We do other stuff throughout the week, but Vol Views comes live. If you want to see what else we're doing throughout the week, just grab that Mixler link, follow us there, and you'll get notified. Second, we go live with all of our stuff. Option Block, TWIFO later on today, live interviews, all the fun stuff we do on the network. It'll go out to you there as well. So if you prefer your content in your ear holes live, we got a great way for you to do that as well. Of course, however you listen, live after the fact, hit us up. Questions, comments, all that good stuff. We do indeed, yes we do, like to hear from you guys, and occasionally like to hear from my cohort as well. He of the volatility Costco infamy, the only guy I know of who's ever discussed at length the VIX term structure in a Costco. He is a greasy meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line. Mr. Meatball, welcome back to the show. Are you in the fava beans aisle today, sir?
No, thankfully my Escalade is working properly, so don't have any issues there anymore. But yes, it's good to be here as always. Good to speak to everybody. Hope everybody's doing great today. Do
you like that title, that honorific of being the only man
the Costco Vol King?
Costco
yes.
Vol King. We should look into some official recognition of that for you. I think the Costco folks should get behind that. You know, the only man to discuss in-depth VIX futures and options trading by way of the pimento beans in the aisle. So there you go. You never know. You never know when the conversations are going to turn to all things volatility like they are right now. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol View portion of the show where we look back at the week that was, and indeed still is, some vol trading, trending, analysis, all sorts of unusual activity, all sorts of perspectives that come across our tape. As we are recording this and indeed streaming it live a little bit past noon Central here, we are seeing the markets back in rally ho mode coming off the heels of those, shall we say, ridiculous unemployment numbers. I think it goes all the way back to 1969 since we haven't seen those levels, with a brief intermission there around 2000, I believe. So other than that, yeah, those are pretty historic numbers. So the market liking what it's seeing there, allowing us to shrug off pretty much the rest of this topsy-turvy, turbulent week we've been in. We've seen trade war back and forth again, kind of heating up a little bit again, driving us south. Then, oh, wait, no, wait, this is kind of overblown, overdone. Let's drive us north again. Oh, wait, we got Italy and some more trade talks and everything else coming on the back burner. Let's go back south again. And all of that has meant a tumultuous week when it came to ye old VIX Cash. As we're doing the show here, hovering right around 13.5, which actually, Mr. Meatball, if it holds true to this, is looking pretty good for you. I believe you were somewhere right around 13.5. So that could be, you could be taking a page from my playbook this week. Let's see, with an exact bullseye, which would be a first for a while for you, which would be good. Of course, I can take partial credit, I believe, because I do believe I drove you north with my somewhere around 12.95 thing, which drove you to the north. So you probably would have been somewhere around that level as well. But we'll see. We have an hour left to go, or right about that. So we all know a lot can happen. Witness the show we did right around the time of the Comey-Hillary email leak, and what happened there? So things can happen over the course of an hour. Right now, they're right around 13.5. Most of the major indices well to the north, liking this number, like I said today. S&P up about 1%, Dow up a similar level. Tech-heavy NASDAQ saying, the heck with that. We're going up 1.5% today, so all good stuff. And, of course, like I mentioned, yield VIX Cash taking it on the chin, off nearly two handles, right around 13.5. Let's see, how low did we get? It's about 13.37, so this is pretty much right around the low here. We'll see, of course. This is kind of something we were talking about yesterday, though, Mark, with Andrew. He brought it up, I believe, on the option block, where we were kind of in this weird scenario where S&P was pretty much right back where we were last Friday, last week, and yet VIX was somewhere around 3 points above where it was. You know, that gets back into that contextual conversation about volatility we always have on this show. You have to look into all the context. And the context was saying VIX probably had to go somewhere. I don't think anyone knew this number was coming out today that was going to drive it like this, but still, it seemed like VIX was going somewhere, because staying there didn't seem that tenable. Was that your thought as well, sir?
Yeah, it seemed a little odd, especially after yesterday when, we really didn't sell off on the 2 months ago on that tariff news. We would have been off, 200 points. And now, because things are calmer, look at us. We're now higher than we were last Friday, despite, everything. And why? Well, non-farms were off the chains, and we had some really good numbers, and it sounds like Italy is not the disaster everyone was afraid of. And so everything is awesome. Everything is cool when you're part of a team. That's the way they're singing in Italy.
Yes, I heard they're big fans of the Lego Movie out there in Italy. But VIX Cash aside, it was or just the fact that VIX kind of had to go somewhere today, it seemed like. That aside, it's been a bit of a tumultuous week, like you mentioned. We saw the trade war sell off, and then the rally, and then the sell off again, and then now today the rally again. So outside of today's near-term madness, what's been catching your eye this week in this kind of ebb and flow? What's been lighting it up over there at Carmen Line this week from a vol perspective?
Lots of up and down shifting in volatility. Nothing really crazy. What I guess the big piece was, even in the midst of that huge sell-off, we got a nice VIX spike and then a big rally the next day. And the market kind of took until the day to say, okay, no need to spaz. I'm good here. That was when it kind of calmed down. But I would say that we're higher than we were last Friday, and the VIX is higher than kind of last Friday as well, which is a little unusual. But I think it shows how kind of news-driven this week was.
Yeah, you don't get those scenarios very often. Obviously, VIX has a lot more going for it than just where the S&P is, but it's a big part of the stew there. It's a nice meaty potato in the VIX stew, if not a piece of beef. So certainly a data point to keep in mind. Some other data points we also like to watch here on the old show. listeners, our old friend VVIX has been moving around. It was 100 coming into this morning, coming off a little bit, about 95. 100, it was about 10 points higher than where it was last week. 95, it's pretty much about 5 handles higher than where it was last week. VIX futures also kind of in a bit of an interesting spot here. We're seeing about less than a handle between the cash and the June future, right around about 0.8 or so, and about 1.4 handles out there for July. So nothing too onerous or out of sorts over there. Anything catching your eye out there, VIX futures wise this week, Mr. Meeple? Anything in the term structure making you, or perhaps your buddies over there, the Thompson twins, kind of scratch their chins and say, this looks interesting?
Yeah, term structure got a little scary there. We did briefly go backward, and then obviously we bounced. It was kind of weird, but yeah, they did everything they could to panic. What I would say is that this week looked a lot more like VIX spikes we would have seen last year, as opposed to kind of the panicky VIX spikes that we saw, or a kind of continuous VIX swell that we saw earlier this year, right? Did this kind of have the feel of like a 2017?
It's funny. It's funny you should say that, because I was thinking something similar as I was watching this. This kind of had a little bit of that muted kind of 2017 feel to, like, we've been there, done that already. And because you're right, if this was the first we had heard of the tariffs like a few months ago, we would have been all over the place, And we all know the market tends to internalize this stuff, and eventually the third or fourth time it gets slapped in the face, the reaction isn't the same. The cheek has hardened to that insult, and so we're seeing that now with this. You're right. So I had a similar
it's
thought.
like a Hulk Hogan no sell.
Yes. You're all over the map on the references today. I like what you're.
Yeah, the no sell from the Hulkster when he starts going to breathing real heavy.
Speaking of which,
shaking his arms.
You have to, if you're talking Hulkster, you got to go watch that Andre the Giant documentary. It's pretty good. Have you seen that one? The HBO one?
Yeah. Although his arms were so droopy because of all, because he's old now. Like his bicep was actually like on the lower end of his arm.
The guy's got to be pushing 70 something now. He's been around forever.
He's getting old.
But still, yes. There you go. There's your aside. There's your recommendation for viewing for the weekend. It's not vol related, listeners, but
no, that Andre the Giant doc was awesome.
If you're an old school,
really was
80s era wrestling fan, let's face it, who isn't? That was the peak, the pinnacle of that form of entertainment. I'm waiting for the Macho Man doc. That'd be a good one, wouldn't it, Mark? You'd be all over that.
Yes.
I know you were very sad. You're still mourning the day that we lost our friend, the Macho Man. Speaking of it, we're talking about VIX futures. We can go down the 80s wrestling rabbit hole for it. Maybe that'll be a new show on the network. What do you think? The 80s wrestling revisited. we can mine all those old feuds for new glory here on the network. But speaking of feuds, we're just talking about VIX futures. A lot of people were asking us about this one, so we'll chat about it here on the show. It's an article coming out of FT, and it was called VIX Mageddon Revisited. It's the buyers who disappear. Looks like this was like a contributor post, a guest post from a professor at the Dartmouth School of Business. Mark, you know how you and I feel about the academics who wade into the volatility space sometimes. We've had a lot of them on the show over the years, and some of them have espoused, shall we say, some interesting topics. I'm still remembering a few years back that great debate we had with that guy about the skew, remember? And I think his research was pretty much that he wanted to just buy far out of the money puts. That was kind of his findings. And we had to, gently dissuade him of that notion being of any practical impact. But I'm not saying this guy's in that camp. I just thought it was interesting nonetheless. A lot of you guys like this article. Yes, this is, what's the name here? Ing-Ha Cheng. That's the professor from Dartmouth. And he's kind of, once again, diving into that what's caused VIX Mageddon, that's what he's terming it here, which is the big spike, of course, February 5th and 6th. And he's saying effectively that demand for long volatility futures has fallen off a cliff here. He has a lot of interesting charts. He calls it a volatility virus that infected Wall Street last year when everyone at the time was primarily short vol, but he mentions it just being everyone effectively got into the vol trade. I could maybe see some of that, how it probably got a little bit farther and more widely spread than certainly given the rash of firms blowing out we saw in the wake of February 5th. Probably a lot of firms are getting into trades that they probably should have. So maybe that virus virus epithet there isn't unwarranted. But he mentions here, open interest in VIX futures has declined to levels not seen since mid 2016. Volumes and trader exposures are down too. Some worrying that the entire VIX derivatives market is in trouble. A little bit histrionics here, never hurts an article. So he says, he kind of talks about the common narrative is that the short vol traders got wiped out in February 5th, and they just haven't come back. And as a result, that's kind of what we're seeing out there right now. But he says simpler, and he also says there's concern about manipulation on the settlement and all that other stuff that people are kind of keeping away from the VIX space. But he says at the end of the day, he thinks it's just demand for long futures has fallen off significantly. Some interesting charts in here. One about open interest, again, falling back to record levels. Net trader exposures, which is, of course, from the Commitment of Traders reports of the CFTC listeners. So he looks at kind of the short positions versus the net long, kind of puts them together and gets the net trader exposure. That's also off dramatically since January of last year. He talks about how the premium built in there for those guys selling the futures hasn't been there as well. That's probably because there is no buyers. And let's see what else here. Let's see. Both groups are reducing their exposure. Late 2017, sharp drop in February, as we all kind of saw. Let's see. And yeah, it's just talking about the profits here for the profits for shorting futures. Not there again because he determines not enough buyers. He says when the premium isn't there for the sellers, it's usually because the buyers of insurance don't want to buy insurance like they did before. Go figure. That's how economists like to look at the world. Let's see here. What else in this article? It's a kind of interesting mark here. Again, I think a lot of you have read it, obviously, because you sent it our way. But he says, so at the end of the day, when everyone's discussing what happened to the short investors, the potential manipulation in the VIX, let's not forget a key question: what has been going on with long vol investors? It's funny, Mark, all this kind of Sturm and Drang about VIX futures open interest and kind of where has it all gone. I thought the answer to this was kind of already pretty easy and relatively easy to point a finger at. That's kind of the demise of XIV and others that accounted for a lot of the flow. Isn't that what you were probably assuming as well?
Yeah, well, it's part of it, but he does have a point in that we've seen some big customers just stop coming around for VIX options and VIX futures. I was talking to a broker that will remain nameless, but think about the two biggest traders from the last year. Neither of them are trading right now. The quote-unquote VIX whale and the quote-unquote 50 cent are both not trading VIX options right now. So that's going to have they were each good for what? Let's say a quarter of a million, 1.5 million contracts a month that was going up. So there is the long game. One thing to think about is, right, you get kind of a VIX blow up like we saw about once every 5 years. And now that we saw it, maybe some of the long demand is kind of waned a little bit.
It's funny you mentioned, I think we have a listener question about 50 Cent a little bit, so he's back on someone's radar, at least here today. It's been a while since we talked about him, but you're right. Our two friends out there, for a lot of the big turnover, particularly in VIX options, it was that VIX whale would do 1 to 2 million contracts a piece when he was rolling, 1.5 to 2 usually. So he was putting up the days. You can almost count, if you look at the days of record VIX volume, you can almost draw a straight line to those and the days he was rolling, because he was a huge chunk of that. Without him in 2017, that might be a good analysis for someone to do. Too bad we don't have our friend Mr. Rhodes on, the keeper of the data right now, because that'd be a good analysis. If you pull the VIX whale out of the equation for 2017, Mark, I wonder if you would have seen those record volume levels we saw from 20. What do you think for VIX options?
I think you still would see it would have been really high. I think a lot of people were looking and getting scared. But yeah, we're going through kind of a lull. The market, we've had a big sell-off. We've not had the market rally to new all-time highs. So basically hedges worked. And so now people are now kind of reevaluating how they're approaching things. I'm not sure how much of the actual as big of a deal as the short vol trades were, they were still only a couple of $1 billion. There's the demand for VIX always came from the long side, and you're right, and it just hasn't been there. But it's not just VIX. I mean, look at SPX, look at ES futures. Volume is down across the board.
Yeah, you're right, and it's kind of funny because our friend, the VIX whale, he would do somewhere, let's say 1.5 to 2 million contracts at a clip. Certainly towards the latter part when he was doing more size. But let's say around 1.5. So he's still doing this product's averaging around 600,000 contracts a day, usually in a decent time frame. So he's doing roughly 3 days worth of volume at a clip every time he's doing that. So if he was doing that amount of size, he's doing at least 2 to 3 days extra volume kind of every month. So that's going to add on a decent amount. Again, yeah, you're right. The number still would have been decent, but that's going to add on a fair amount to overall. That's probably one of the reasons why, again, when we look back at that anomaly year of 2017 and how could things like VIX options be setting volume records in a year, and VIX futures certainly when VIX itself was anemic, then that's certainly one of the reasons our friend the whale discovering. Maybe, Mark, now that we're trending back lower here again, maybe we'll see, for a long time there, it was kind of just de rigueur. It was the trade to do in VIX land to do that short 1x2. Maybe now that we're getting a little bit, I think we have to hit a little bit lower, but still, around these levels, maybe we'll see that start sparking up again. Maybe that'll drive some new life. What do you think?
Yeah, well, I think when that starts, that'll start playing when you see the VVIX get back consistently below 90. Because that trade is actually more about the level of the option vol than the level of the VIX itself. And so if we see VIX hang around 13.5, but VVIX get back to like 80, that'll be the time to throw that on. Anytime VVIX gets below 80%, I find that 1x2 to be a highly effective form of hedging.
Yeah, you're right, because if VVIX is too high, the two leg on the upside, it's a wee bit pricey to put that one on. But you're right, we've been at this level. VVIX has not really been able to break that much south of 90 for too long for some time, and certainly, like I said, we're at there right around today, around 95 still. So yeah, we need a little bit more downside than that, maybe a little bit more overall downside as well out there in vol land, and then I wager we'll see a massive explosion back again in short. I mean, I didn't mind talking about it all the time. It's been a nice break for about a year or so. We haven't really talked about it that much. Maybe I wouldn't mind talking about it again. So if you guys want to start slinging those out there, we would talk about them on the show. Speaking of what's going on up here in VIX options, it has been an interesting week. If again, not the most, even though things were happening, indices were moving, as kind of Mark alluded to earlier, kind of had a bit of that muted 2017 feel to it because we're not really seeing the numbers in terms of volume really to back up these kind of aggressive swings we're seeing in the indices. Today we're seeing about 200, not even 270,000 contracts on the tape for VIX land. Pretty much all calls again, 200,000 to 60,000 on the puts. ADV coming off yet again. We are heading into that early summer period, so we're going to see ADV probably decline anyway. So it was, as I mentioned earlier in the year, post-February, pushing 1 million contracts, which we knew was unsustainable. VIX usually averages around 660 or so, somewhere in that range. Right now we're below that, 557 out there for the ADV, and it's been another week where pretty much we didn't really hit that. We had 288 yesterday, about the same level, 290 on Wednesday, 401,000 on Tuesday, and Monday, of course, 0, because we were all off observing Memorial. You don't really celebrate Memorial Day, it's observing Memorial Day. About 2.8 to 1 calls over puts out there, so it's a little bit more call heavy than it has been. Again, probably reflecting of some of the moves we've seen of late, but not a ton. Certainly anyone who watches that number knows, until it gets north of 4. We also used to say north of 3, but then you're nervous all the time. You get north of 4, that's when you start paying attention to a number like that. In terms of what's active, what's hot out there in VIX land this week, in terms of the big open interest positions, again, this is coming into this morning. There were some trades going up today that may change this, but coming into this morning, the top 10 VIX open positions, the hot strikes, number 1 with a bullet, The June 20s doing about 250,000, a little more than that, about 256,000 contracts to take the number one spot. Again, that shows you kind of how light the OI is right now, because usually number one on our list is going to be 450, 500, 600,000 contracts. Right now, it's a mere pretty much 250,000. So things a little bit light out there. Number two, the June 15 put. It's been popular for a while. That's the put strike du jour, about 195,000 contracts open there. Number three, the June 30s, taking the other side of the trade there. The June 30s on the upside, 181,000. Number four, the second and final put on our list, the June 13s, 165,000 open there. Number five, the June 21s, it's 162. And then we got pretty much a nice June call strip the rest of the way. The number six, the June 25s, $1.48. Number seven, the June 27s, $1.47. The June 15s, the comparatively normal June 15s, 141,000 open there. Number nine, the June 18s, the 140,000, and we have one July call barking up the tree there at the end. The number 10, rounding out our list here, the July 30s with 135,000 contracts open there. Total pretty much exactly 7 million contracts outstanding, about 5.15 on the calls and about 1.85 million on the puts. Going out to some interesting activity. Like I mentioned, there might be some changes to some OI, even though we don't see the 37 halves on our list. But we did see some action in the 37 halves today. A total of, at least coming into the show, they may have done more since then, about 45,000 of what looks like, Mark, to be just pretty much a straight up June, July roll on the 37 half strike. We talked about 37 halves before. It's kind of been an interesting popular strike for a little while there, kind of a little bit optimistic, shall we say. It looks like someone wants to keep that party alive out there, doing a net total of about 45,000 of these June, July 37 half call spreads here, doing it for looks like about 14 cents, 45,000 times. Looks like they're definitely open on the July. How much OI we have here? We have a ton of OI. Like every strike in VIX land, we have a ton of OI on the June. So probably looks like it has the whiff of rolling about it, and does look like they're buying the July. So, Mark, keeping the July, or I should say the 37 half party alive, at least for another month. What are your thoughts on that, as well as maybe any other VIX paper that was coming across your personal tape this week?
Yeah, I saw that one go up. There was also a buyer of some June, the June 23-30 call spread that went up some size. Actually, the biggest trade of the week that I've seen was in terms of contracts was actually in VXX. A customer bought the July 70-90 call spread.
Oh, you're killing me. I got that
75,000 times for 32 cents.
Yeah, I saw that one. That one was going to be
That's a big one.
That's a big one. All right, we'll get to that now. Then I was going to test you. I was going to test you. I was surprised to see our number 2 and 3 VXX top positions had changed this week for the first time in, I don't know, 6 months.
Yeah, there's a big customer order. The other paper we saw, there was a seller of the July 27 calls at kind of the top yesterday. And this is kind of interesting. Right around when everyone was panicking yesterday, a guy bought the July 14.5 puts 10,000 times, and then a couple hours later sold the July 27s 15,000 at 52.5. So definitely a lot of paper fading yesterday's move, and that was kind of the juxtaposition I saw. Kind of everybody put on was a big fade of any vol pop we got yesterday, which is why it was kind of anemic yesterday.
Yeah, I mean, that one didn't take a crystal ball at the end of our segment to realize that was probably a bit overdone, and probably needed to come. I mentioned all the contextual clues coming into that one gave you a little bit of a hint, a little bit of a whiff that something was afoot. Speaking of things that are afoot, Mark, I was going to ask you this before. You kind of stole my thunder, but I'll give you a chance to look smart now anyway. Number one open position in VXX is still our old friend, the Jan 2019 10 puts, but we got new players, number 2 and 3. What do you think they are, sir?
I'm going to say that it's the July 70s and the July 90s.
Genius, unadulterated genius, sir. How do you do it every week?
I don't know, man.
I don't understand.
I don't know.
So, yeah, they actually have eclipsed The used to be pretty much a Jan put strip there, 1 to pretty much 5. It was a Jan 10 puts and the 15 puts and the 5 puts. But this July vertical has usurped those. It's climbed all the way to number 2 and number 3 with about 93,000 open on each strike or close to it. That just comes in a little bit ahead of the Jan 15 puts, which have about 92,000 open. I know you mentioned it, Mark. This is kind of funny, actually, because we had some listener questions last week about, kind of amounting to, why the hell would anyone buy calls in VXX, right? That's kind of the narrative that gets passed around out there. That even though we kind of even debunked it last week on the show, just looking at the numbers from last week's show, I think it was pretty much even 1-to-1 calls over puts in terms of VXX. So yeah, long-term puts have the bias, but people do trade calls out there. And apparently they trade some aggressive calls. I was stunned. You see what there was with this? These July 70s were trading 53 cents at a 110 vol. You see, this is, does that seem a little rich to you?
No, it does. It does. This is, which is why they sold the, I mean, think about this though. They not only is that rich, how much of the July 90s? Those are 20 cents.
21 cents, I believe. Yes.
Yeah. I mean, so, the guy bought 110, super rich, but he sold 126. So, not terrible. What was the during the kind of the peak panic? What was the high on VXX? It got up to what? Almost 60? Something like that. I think it got up to almost 60. So it's some sort of this feels like some sort of kind of static hedge, because I saw a similar trade go up in June. This is very 50-cent-esque.
Yeah, it has that feel to it. It got up to about, in February it got 56.5. That's the high.
Yeah. So, at 56.5 bucks, how much is that 70-90 spread worth? Let me tell you, folks. I know you're concerned. You want to know, well, how much would this guy make? Well, I'll tell you. On his, let me go up 50%. So at 52 bucks, he would make, 1 second here. He'd make like $11.25 million. So
not a bad day's work.
No. So, it's a 210. He's spending what, $210,000 to try and make, $10-15 million if the market blows up. So it's some sort of static hedge.
Yeah, it's got to be a hedge component. I can't imagine this guy just outright coming in and deciding, I want this 70-90 vertical for, what do you do it for? 20 odds, 30 cents, 32 cents. I'm still stunned that those 70s are 53 cents and the 90s are 21 cents. I mean, I guess I haven't done my homework to go look at the far out of the money calls in VXX enough. I'm going to do that after the show. Clearly there are opportunities out there. If these things are trading for 21 cents in the July 90s, wow, that's impressive. So yeah, this one, I think you concur, this has the feel of a hedge as opposed to an outright spec, right?
Correct. It's got to be a hedge.
I mean, for all the highlights this thing is making and all the headlines, this is crazy, outlandish, and certainly standing alone, the options component is, I think you could come up with an adjective and you can apply it to this one. Crazy, outlandish, ridiculously improbable, all of the above. But as Mark pointed out, it could work if we do see a February. I mean, again, it doesn't take to get all the way to 70 to make this thing look good. If we have one of those explosions up to 50 again overnight, like we did recently, guess what these July 70s are going to be worth? I guess it's going to be more than 53 cents. As ridiculous as it is that they're worth 53 cents, they're going to be worth more than that. So we saw that with those crazy Tesla puts. You got these. You got this crazy out of the money calls that tend to just go nuts when the markets go nuts. And so it's an interesting time. Yeah, listen, I'm sure you guys have thoughts on this funky VXX spread. You guys all love your VXX. Are you trading it? Were you part of this one? Were you the 70,000? Or maybe you just piled in for a 10 lot after the fact. You couldn't get enough of this upside. I'm sure for a lot of you, this trade is just completely abhorrent, because then just looking at your mail, you guys don't have the love for all things VXX upside, I should say. So interesting stuff. Mark, before we roll on to some questions, other stuff, I know you're a big fan of of rates vol. We saw a lot of volatility in that space this week, courtesy of our friends out of Italy and the Eurozone making a lot of noise out there. And it's funny because coming into that, the narrative was around kind of the ever declining, I should say, fixed income vol out here in the space. And then this week it's kind of changed. I know you like VIX and a few others. Anything catching your eye in the fixed income vol space this week, sir?
Yeah, the speed with which fixed income moved. Rates got completely oversold, and then the snapback combined with a little bit of panic on Monday, and the 10-year, it moved extremely quickly. It took only a couple of days for options for everything to come running back to whence it came. Pretty impressive.
Yeah, I'm looking here at your old friend VIX. Not a one we talk about a lot here on the show, listeners, because quite frankly, A, there are no options. B, it doesn't really do a heck of a lot. It is the 10-year U.S. Treasury note VIX. There's a VIX for just about everything under the sun, including the 10-year. And this thing was kind of languishing around, about 3.5 to 4 in that range. It was actually about 380, 375 going out last Friday. And then we come back in on Monday, and it's pretty much hitting 5. That's a big move for this index. It hasn't really moved a heck of a lot outside of back on February 8th, as you might imagine, when it kind of spiked in a handful of sessions from about, even then, it was still at about 4.5, and it went to about 6. So about a 1.5 handle move, and then it came off quite as aggressively. So that's a big jump from about 370 up to over 5 in a handful, in just a session or two. So that's a big move out there in good old VIX. If only there were options on it to play with and trade some of that vol out there, then it would have been interesting. Speaking of vol and other products, there are other VIXs like you mentioned. The crude VIX, aka the WTI VIX, aka OIV, hovering right around 27 right now. If you've been watching that, again, we'll get a lot more into this discussion on TWIFO coming up in about an hour. But if you've been watching that Brent WTI spread, it's kind of performing the opposite of how everyone thought it would, which is kind of interesting, exploding out to about 11, where some people thought it would be capped around 6 or maybe 8 on the outside there, given all the things that are going on in Iran versus shale. All that's meant to vol has actually stayed relatively stable this week out here, right around 27, which in the OIV, which if you know is fairly elevated. It got as high as about 29 in some recent sessions here, but that's still not bad given where we've been. We've seen it get a lot lower out there, and it kind of hovered a lot lower for quite some time out there. In fact, it got down into the teens not too long ago. Into the beginning of the year, we were in the teens there. So and it certainly has gotten much higher back in the more turbulent days of the OPEC deal about a year and a half ago and stuff. So it's interesting to watch out there. The other name other product people have been watching out there from a vol perspective for quite some time is gold. You can always look at the old gold VIX GVZ right around 1060 right now, off another 2.5%. I know you guys love that. So that's almost a half a handle lower than where it was last week, which was a point below where it was the week before. And this is already at pretty much historic low levels. I mean, you look at the vol cones out there in gold land, and we're pretty much every week at or around 5-year lows. So people are kind of waiting for that next big thing to really drive gold vol north. And at least for the last week or two, we have not seen that materialize. Mark, anything out there catching your eye? In the commodity vol land, could be crude, could be gold, could be crypto. What's catching your eye out there, sir?
Yeah, crude is another one where it was moving around a lot and seems to have kind of found its footing. But that was one where, one thing that really exacerbated things on Monday was that crude got absolutely destroyed. And we saw rates getting destroyed, and so you had your banks, and you had two major industries, banks and energy getting blown away. The other piece that was weird was IWM and the Russell, super strong throughout. I remember at one point we were down over 20 points, and the Russell 2000 was up on the day on Tuesday. So all kinds of kind of commodity, the commodity trade has been driving a lot of the, call it correlation breaks between the Dow, the NASDAQ, the S&P, and the Russell 2000.
Yeah, that's another topic we've actually broached a bit, and probably will again today, on on good old TWIFO is just kind of, you can't say insulated because nothing is truly insulated, but the somewhat protected nature of the Russell against these macro shocks that we're seeing. Large cap S&P, third or more of their revenues are coming from usually overseas, so they're subject to these macro tremors, whatever it might be. Rates out of Italy, terror, trade wars, take your pick. Korea, all that stuff messes them up. Whereas Russell, primarily domestic, primarily microbes, as it's in the name, small cap. So that's been a big driver of that disassociation out there, and usually something that tends to drive some decent paper. Remember when we had our friends from Russell on the show, Mark, that was usually the time they would see big sparks, is when they see vol disassociate, or the indexes, the underlying indexes really disassociate from each other. And we see a lot of spread trading out there in Russell land. Have you started to do you do any Russell in the vol fund, sir?
We do in the pit, not as much in the vol fund. It's hard to get, in most cases you get way better liquidity in the big indexes. So like SPX, you get way better liquidity than SPY. IWM actually, I think, is a little easier to trade than the Russell 2000. I don't know why, but so I tend to stay away from the RUT itself within the fund. But I will mess around with IWM and RUT within pit chat when we're pit chatting.
Pit chat. I heard you and Andrew have the Mark and Andrew show now with the aptly named. I heard
once
it's
a week.
Hilarious. It's got skits, improv, and some 80s wrestling nostalgia. Is that the case?
Yes, all sorts of things. Usually I lead off with a joke or two, and then some puns, and then we.
So that's
go
good.
back
So
and
it starts low, and then you could build from that. Is what you're saying?
Exactly.
Keep the expectations low, and then you can always raise them over time. That's a good approach. Maybe I should take that for the show. And of course, you mentioned Russell. It's hard to trade Russell. Our old friend RVX. No, it used to be options on that. No options on that. That's of course the Russell 2000 VIX, which is hovering right around a little bit shy of 15 right now, off about a point and a quarter, a little over 7, almost 8% out there. That's a product I miss. That's another one that used to shoot to life when we'd see these disassociations. So if there were options out there, I'd imagine it would be trading fast and furious. And I know our friends at Russell are working hard to get RVX kind of back up and running again, so they could have a product out there in the vol space. Speaking of products and volatility, let's check in really quickly on our old friend crypto. Another not great day here for all things Bitcoin. Looking at the futures, futures right now on the on the CBO, right about 105, off 105. So we're trading about 74.50 out there in the front month. Doing decent paper. Looks like about close to 3,000 contracts net across the term structure. It's not the most active day, but yet another day sell-off land in all things crypto. Speaking of Bitcoin and crypto, I think we got some questions for you guys, and you guys have some for us on that front. So let's get to it with some of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the voicemail, the portion where you guys take the reins. And Mark, we were just talking Russell. We're just talking Bitcoin and VIX. So perfect time to bring up our flash poll here for the latter portion of the week. Posted right before vol views. You guys have taken to this one. You guys like your vol polls. Go figure. We asked you guys here just yesterday. Let's see. Let's keep in. We had some good volatility questions. Speaking of which, before I do, let me pay off last week's question. We asked you guys going into the holiday weekend. Notoriously tough time to actually get your hands around VIX because usually they crush it, then it pops back. So we thought let's play with it a little bit. Let's ask you where VIX Cash is going to open on Tuesday rather than where it's going to close on Friday. We gave you 4 choices between 12 and 14, between 14 and 16, 10.5 and 12, and higher than 16. Most of you, about 40%, chose 12 to 14 range, which is pretty much where it went out on Friday. Not an unreasonable choice. Seemed like the answer. And of course, coming into Tuesday morning, we actually opened at 1439, almost 1440. So actually, the right answer was the 30% of you who picked 14 to 16. So congrats to you. And actually, intraday got as high as about 1878. So if you picked much higher, north of 16, you get a nice little, you don't win, but you get a nice little pat on the back as well. So it was a strange one where almost 3 answers were technically correct out of the 4 out there, or at least could have been reasonably assumed to be correct at some time. So interesting one. This week we asked you guys, let's keep with the vol theme. Very simple one. Which product do you think has the highest 30-day implied vol? Now again, no cheating, no going to your broker, no looking it up. Just use your gut. Like I mentioned before, I was amazed that those July 70s and VXX were 53 cents. That one seemed a little contrarian to me. So you guys use your gut for these as well. What does your gut tell you? Is it VIX? So not S&P 500. I want VIX itself, aka so that could give you a hint into what that one's worth. Tesla, our old friend Tesla, it's a pretty volatile product. Is it Bitcoin itself? Or is it, actually, we were just talking about this, the Russell 2000. So a lot of interesting stuff going on out there. Mr. Meatball, what is your vote, and what do you think our audience is voting for?
Over the last, what has had the highest implied
30-day implied right now.
We have implied for Bitcoin?
Well, technically, yeah. It can be done.
All right. So what has the highest 30-day implied?
I guess if you want that one to be realized, I guess that can be too. Either way, the number is kind of...
Yeah. I'm going to say, let's see. It's not the Russell. It's either VIX or Bitcoin. I'm just deciding which one. I'm going to say Bitcoin.
Interesting vote. I can't dissuade. I know the answer, so I won't weigh in yet myself. But it is an interesting fight. I just mentioned off the RVX a little while ago, so maybe that'll give you a clue as to what Russell is looking at. VIX, we were talking VVIX before, listeners, so maybe look a little bit there for some guidance. That's all I'm going to say. Bitcoin, you got to tune into TWIFO. We talk about what that vol is out there, and it's a little bit different maybe than you might think. And of course, our old friend Tesla out there. So far, though, let's see what's winning our poll. Well, Mark, it's a tie. It's a tie pretty much between two heavily hyped products. You got Bitcoin bringing up the top with 38%, followed hot on its heels, not by VIX, but by Tesla with 34% out there saying it's Tesla. 18% saying it's VIX itself. 10% saying the old Russell 2000. You got about a little bit less than the 24 hours or so to get your votes in. It's kind of a flash poll for the end of the week. So get out there, get your votes in. Maybe we'll cheat and reveal the answers on TWIFO coming up in about an hour. But yeah, that's an interesting one and a lot of good stuff here. Speaking of good stuff, we got celebrities. We got faux celebrities writing into the show, Mark. We got everyone's favorite, Charles Montgomery Burns, writing into the show. He might have one of my favorite Twitter handles I've seen. It's @ReleaseTheHounds. I love that. I think he's chiming in. I think he was talking about, this came out after last week's show, I believe. He said, I enjoyed listening to the broadcast today. Excellent. And we got a thumbs up emoji. So there we go. Mr. Burns likes our show, Mark.
That's good to know. I'm a big fan of Charles Montgomery Burns myself.
I love that handle, @ReleaseTheHounds.
See my vest, see my vest.
Yes, that's
made
a good
of
one.
pure gorilla chest.
We're all over the place with the references today. Mr. Burns, he said our show was excellent. So that we can have there's worse praise we could have heaped upon our show. Ned Brown, he's chiming in on kind of what we were talking about. That discussion we had with Parametric on the show last week, Mark, about their paper on, kind of VIX and what the manipulation, what's going on with that. He writes in to say, I wish it was made clear in these articles that the problem seems to be around the settlement in VIX. And he also chimes in, a good idea on the orders to bring more liquidity into the settlement. He also says he assumes volatility was a reason crypto options aren't being pushed. Has anyone asked the SEC about them? Well, we'll get to that, I think, maybe on TWIFO. But the front part of the question here, he's asking. He says, "Yeah, that's kind of what the point of our discussion was, Ned. Was that it's for all the Sturm and Drang around this, all the brouhaha around this manipulation. People have this idea that it's intraday that it's being manipulated like crazy. In fact, I think that might have been some of the allegations made by the whistleblower as well, which is kind of why I find those a little bit ludicrous. But that said, yeah, the notion that it's just all day long intraday being maneuvered by these Illuminati of VIX is a little bit outlandish. Around the settlement, things get a little bit wonky, and we've been saying that from day one. That's why you should probably avoid that, and most people do. And then this whole discussion becomes moot to you. Granted, you want a thing that settles properly, and that's something that should be investigated and looked into. I think they're taking the appropriate steps. But yeah, that's kind of what the gist of our conversation was. And so I guess it sounds like you agree with this. He also sounds like he agrees with you, Mark. He likes your idea on bringing in the extra orders or at least revealing that imbalance to the market to maybe correct that. So you got a fan there. That's great. I'm really happy. You sound super happy. I am. This is me sounding happy. I'm super happy. You should push someone out there a little bit more, get out there. Because again, transparency, that's what the whole point of this is, right? To get more transparency around this. So if they did that, if they revealed we have an imbalance, would you like to correct it? I think people would probably take advantage of that, don't you think? Oh, for sure. I think they would. So there you go. We got transparency and you get a more inline settlement all in one fell swoop. So what else you got to worried about here? He wants to know, let's see. We'll touch on crypto here. Belat, one of those two, wants to know, what do you think of crypto vol at these levels, particularly Bitcoin? Are you guys doing any trading even though there aren't really any true options available yet? Well, I can't reveal the first part yet. We still have our poll out there, Mr. Belat. Stay tuned to TWIFO. We'll talk about the exact number. If you listened to TWIFO last week or maybe the week before, you've already heard that number. So you could use that when you're answering your poll number. But what about the latter part, Mark? Have you given all the frenzy out there? I'll say for myself, I'm starting to get pulled to the dark side. I haven't done it yet, but people are on me all the time. I got to get Kraken. I got to get Ripple, all these things. So I'm thinking I'm going to open up some accounts of these things. Just at the very least, I want to experience what a lot of the end users are experiencing, see what their process is for onboarding some of these things, for opening accounts, for making transactions. I hear it all anecdotally, and I hear the complaints. I want to kind of experience it for myself. But yeah, right now I don't have any sizable crypto positions of my own, but that could change as I start playing around with some of this stuff. Mr. Meatball, are you dabbling in any of the cryptos yet, sir? Yeah, I do. We own, not within the fund, just personally, a tiny bit of Ethereum and a tiny bit of Bitcoin and a tiny bit of Litecoin. Primarily, what are you using? Those, Coinbase or what's your go-to? Yeah, just on Coinbase. And I'm not trading it. I'm just doing it so that I have an understanding of, since people are looking at it, it's important that I have an understanding of kind of how it, you want to have an understanding how it works and exactly of it and the process. I invested a little bit in those. The one I've said this before. The one I think long term is going to be the winner is Ethereum. That's where CME's hanging their hat, right? They just launched their new Ethereum index, so not tradable yet, but they at least have an index tracking it. Well, so that's how you get your hands on crypto kitties. Is you need Ethereum. There you go. That's how you get it all. So yeah, a little bit of dabbling. I think you're right. You can trade them, but they're not. In fact, I was talking to some people about that this week about what goes on into actually trying to do some quote unquote arb between these venues out there. It's a lot more laborious than you might think, listeners. But it's interesting, and maybe something we'll explore on the network soon. But that said, so far I haven't done a ton of size myself. We'll talk about this more on Twi, folks. I know Nick has been doing some out there. He's a big Ripple fan. I know that. We'll see about Ethereum, but interesting stuff. All right, speaking of which, though, we got to keep rolling. Oh, we'll do time for one more. We were talking about 50 Cent before. Mark, this comes from Pills with a Z. He wants to know, did we ever uncover the mystery behind 50 Cent? Yeah, it's not really mysterious anymore. I thought we know this guy's name. I'm blanking on what it is right now, but it wasn't like some fund that started with R out of London, right? I believe so. That sounds like I'm not sure. Yeah, that sounds. Off the top of my head, I want to say that it was something that began with R out of London. I'm blanking on what it is myself. But yes, the mystery was solved out there. Just search for 50 Cent, and the exact name of the fund will come up. And he hasn't been playing lately, so we haven't had a chance to really talk about him. Your question, and ironically, Mark bringing him up today is the first time we talked about him in quite some time. Now it's time for us, though, to keep on rolling to the final portion of the show. It is time for Crystal Ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. This is indeed the portion of the show where we try to wrestle the slippery greased pig that is the VIX. And if you've been paying attention to the show, I know I've been doing a pretty good job of that the last couple of weeks. To toot my own horn, this week, not so much. Mr. Meatball, he got me by about half a handle. I went about 12.95. Mr. Meatball went 13.5, and it's pretty close, Mr. Meatball. 13.58 to round out the show. So it was within our mandated 0.1 for a pretty good shot there. So I doff my cap to you, sir, even though I know I nudged you north a little bit last week. So I take a modicum of credit. But I'll give it to you, sir. Have at it. You get pride of place. What say you for VIX next week, sir?
12.5. 12.5.
12.5. So a full handle below.
I think we have some serious downside.
We're looking right now. Interesting. Well, of course, we had, the non-farms coming out this week, so that kind of takes a lot of the wind out of the sails. And also, no really more earnings. You never know on the macro side, so it's kind of hard to wager on that. But given where we are, I can't fault that. I'm not too angry at my level from last week, though. So I was going to move it down a little bit to around 12.75, but I think you're at 12.5. So I want to give you some room to breathe there, sir. That would just be the polite thing to do as the host. So I'm actually going to do a very rare thing. I don't think I've done this in quite some time, if ever. I'm going to keep my prognostication the same for next week. We think about
nice.
That 12.95, sir. I'm taking a play out of the Meatball playbook. It hasn't worked out too well for me, so maybe I shouldn't do it. But I'm going to do it anyway. So there we go. Keeping it the same. 12.95. Everyone out there who wants to make your bets, there we go. We got a 12.5 on the Meatball. 12.95 coming in from me. Speaking of things coming, that is, we're coming to the end of Volatility Views. Unfortunately, we could talk for many hours, listeners. But we've got to go. We've got other things to do. I've got to talk some more commodities and options in a little bit. Mark has to go to Costco. A lot of things have to happen here on the old show. But before we head out of here, listeners, and by the way, if you are listening live, stay tuned. We'll beam some fun stuff into the chat for you. Stay tuned. We'll be back in about 30 minutes talking all things. You got equity vol. We got all the crazy vol going out in gold. Not the gold, crude. And some ags, I think, as well as probably some crypto getting in the mix out there. So stay tuned for that coming up on TWIFO in about exactly 30 minutes. If you're listening after the fact, just download it on your platform of choice, and you can listen to it wherever you want. You probably already got it in your iPhone or wherever you're listening to this. So then just ignore what I just said. But before we go, Mr. Meatball, you guys are popping off a lot of things over there in the land of the pit. You got VXX made easy. I know Andrew said you're going to do some cool things with Asian options coming up soon. So what's kicking around over there?
We're going to be launching our easy series where we're going to go through everything you need to know about options in an easy way. That's up and coming. And then again, within Carmenline, if you are interested in a smarter way to be long the S&P 500, have I got the solution for you? It's Carmenline Capital's Broad Cap Hedge Fund. Obviously, you have to be a accredited investor. So just a heads up.
That's true. The Broad Cap Fund kind of limits the ability to go into the Russell.
It does.
It's not really in the name there. But otherwise, that would be cool. I'm looking forward to the Small Cap Fund coming soon, sir.
Yes, indeed.
There we go. Carmenline Capital. To learn more, optionpit.com. If you want to join the pit chat, join the crazies over there. You want to check out the Mark and Andrew show, God help you. Or indeed, if you want to check out all the VXX made easy, all that other fun. Talk about why people are buying these crazy upside verticals in VXX. That's a good place to go do it when you're not listening to shows like this. And on behalf of Mark and indeed myself, thank all of you out there for downloading, streaming, subscribing, sending in questions. We'll see you back next week for more Vol Views, or in about half an hour for more TWIFO. Take your pick. We'll see you then.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.